Everything you need to know about MAXJ ETF, insights, risks, and opportunities for investors. What is the primary focus of the MAXJ ETF? Answer: B. Japanese equities. Explanation: the MAXJ ETF is designed to provide exposure to Japanese equities. It tracks an index composed of Japanese stocks, making it a vehicle for investors seeking to gain from the performance of the Japanese equity market. Which index does the MAXJ ETF most closely track? Answer: C. TOPIX index. Explanation: the MAXJ ETF is designed to track the TOPIX, Tokyo Stock Price Index, which represents the performance of all domestic companies listed on the Tokyo Stock Exchange's first section. What type of exposure does the MAXJ ETF offer? Answer: A. Geographical. Explanation: the MAXJ ETF provides geographical exposure specifically to Japanese equities. It does not focus on sectoral, currency, or interest rate exposures. What is the typical weighting methodology used by the MAXJ ETF? Answer: B. Market capitalization weighting. Explanation: the MAXJ ETF typically uses market capitalization weighting, where companies with larger market capitalizations have a greater influence on the ETF's performance. What is the most common currency denomination for the MAXJ ETF? Answer: B. JPY. Explanation: the MAXJ ETF is primarily denominated in Japanese yen, JPY, since it focuses on Japanese equities. Which of the following best describes the investment strategy of the MAXJ ETF? Answer: D. Index tracking. Explanation: the MAXJ ETF follows an index tracking strategy, aiming to replicate the performance of the TOPIX index by holding a portfolio of stocks that mirrors the index's composition. What is a likely benefit of investing in the MAXJ ETF for an international investor? Answer: B. Exposure to Japanese economic growth. Explanation: the MAXJ ETF provides international investors with exposure to the Japanese equity market, allowing them to benefit from Japan's economic performance. What type of ETF is the MAXJ ETF classified as? Answer: D. Passive ETF. Explanation: the MAXJ ETF is a passive ETF, meaning it aims to replicate the performance of the TOPIX index rather than actively selecting securities. How often does the MAXJ ETF typically rebalance its holdings? Answer, B. Quarterly. Explanation: ETFs like MAXJ typically rebalance their holdings on a quarterly basis to align with the index they track. What might be a key risk factor for investors in the MAXJ ETF? Answer, B. Currency risk. Explanation: currency risk is a significant factor since fluctuations in the value of the Japanese yen against other currencies can impact the performance of the MAXJ ETF for international investors. What kind of companies are primarily included in the MAXJ ETF? Answer, A. Large-cap Japanese companies. Explanation: the MAXJ ETF generally includes large-cap Japanese companies, as the TOPIX index primarily represents major firms listed on the Tokyo Stock Exchange's first section. What is one reason an investor might choose the MAXJ ETF over a similar fund focusing on Japanese equities? Answer, C. Broader index coverage. Explanation: the MAXJ ETF might be chosen for its broader coverage of the Japanese equity market compared to funds tracking more narrow indices or sectors. What type of investor would most likely benefit from the MAXJ ETF? Answer, B. An investor looking for exposure to Japanese markets. Explanation: the MAXJ ETF is suited for investors seeking exposure to the Japanese equity market and those interested in the performance of Japanese companies. How does the MAXJ ETF handle dividends paid by its underlying stocks? Answer, A. Dividends are reinvested in the ETF. Explanation: typically, dividends from the underlying stocks are reinvested in the ETF to maintain the fund's performance aligned with the index. What is a typical expense ratio for the MAXJ ETF? Answer, B. 0.20%. Explanation: passive ETFs like MAXJ often have relatively low expense ratios, and 0.2% is typical for such funds, reflecting the lower costs associated with index tracking. How does the MAXJ ETF impact an investor's portfolio diversification? Answer, B. Provides exposure to Japanese equities. Explanation: the MAXJ ETF helps diversify an investor's portfolio by adding exposure to Japanese equities, complementing other international and domestic investments. In which of the following market conditions might the MAXJ ETF underperform? Answer, B. Japanese economic downturn. Explanation: the MAXJ ETF may underperform during a Japanese economic downturn, as it is heavily exposed to the performance of Japanese equities. Which sector is likely to have the largest weight in the MAXJ ETF? Answer A. Financials. Explanation. In the Japanese equity market, the financial sector often has a significant weight due to the presence of large financial institutions in Japan. How does the MAXJ ETF generally compare in terms of volatility to actively managed Japanese equity funds? Answer B. Less volatile. Explanation. The MAXJ ETF, being a passive fund, typically exhibits less volatility compared to actively managed funds that may have higher turnover and sector concentration. What is the primary trading exchange for the MAXJ ETF? Answer B. Tokyo Stock Exchange. Explanation. The MAXJ ETF is primarily traded on the Tokyo Stock Exchange, aligning with its focus on Japanese equities. How might geopolitical tensions between Japan and its neighbors affect the MAXJ ETF? Answer C. Negative impact. Explanation. Geopolitical tensions involving Japan could negatively impact the MAXJ ETF by causing market uncertainty and potentially affecting the performance of Japanese equities. What is a primary advantage of investing in the MAXJ ETF for those focused on long-term growth? Answer B. Exposure to Japanese growth stocks. Explanation. For long-term growth investors, the MAXJ ETF provides exposure to Japanese equities, which can offer growth opportunities aligned with Japan's economic performance. What might be a reason for lower trading volume in the MAXJ ETF compared to other ETFs? Answer B. Low interest in Japanese equities. Explanation. Lower trading volume might be attributed to lower investor interest in Japanese equities compared to other global markets, affecting the ETF's liquidity. What kind of tax implications might an international investor face with the MAXJ ETF? Answer B. Japanese withholding tax on dividends. Explanation. International investors might be subject to Japanese withholding tax on dividends received from the MAXJ ETF. How does the MAXJ ETF's performance generally correlate with the Japanese economy? Answer C. Positively correlated. Explanation. The MAXJ ETF's performance is positively correlated with the Japanese economy, as it tracks an index of Japanese equities. What type of investor might prefer the MAXJ ETF over a mutual fund investing in Japanese equities? Answer B. An investor looking for lower fees. Explanation. The MAXJ ETF, being a passive fund, typically offers lower fees compared to actively managed mutual funds. What effect does the Japanese yen's appreciation have on the MAXJ ETF for foreign investors? Answer A. Decreases ETF value. Explanation: for foreign investors, an appreciation of the Japanese yen can decrease the value of the MAXJ ETF's returns when converted to their home currency. How often does the MAXJ ETF disclose its holdings? Answer D. Quarterly. Explanation: most ETFs, including the MAXJ ETF, typically disclose their holdings on a quarterly basis. What is a common performance metric used to evaluate the MAXJ ETF? Answer D. All of the above. Explanation: performance metrics like the Sharpe ratio, beta, and alpha are commonly used to evaluate ETFs, including the MAXJ ETF, to assess risk-adjusted returns and market sensitivity. What potential regulatory risk could impact the MAXJ ETF? Answer A. Changes in Japanese tax policy. Explanation: regulatory risks, such as changes in Japanese tax policy, could affect the MAXJ ETF's performance and its impact on investors.